All right, welcome everybody. We're going to get started here momentarily. Please chat in. Let us know that you hear us all right, that see my screen all right. In fact, I'll even turn this on and you'll be able to see me. How exciting. Welcome everybody. Just making sure we're good. Feel free to chat in. There's two places. If you're actually on the Zoom webinar, you can actually chat in under webinar chat. And please do feel free to chat in while we're going across a couple of topics this morning. Excellent. Chat in where you guys might be joining us from, what part of the heat you are in right now. So I'm always curious where everybody is joining us from. Anyway, welcome everybody. My name is Don Kaufman. We'll start here just momentarily. Again, just give everybody a second to get off and running, find where everything is in here, and we'll be good to go. Awesome. A little bit of caffeine along the way too. Excellent. So a couple people chatting in. I recognize a few of the names already in here too. Fantastic. Okay. We got Charlotte, we got LA, we got Jersey, we got San Diego, we got Delaware, South Bend, Indiana, Costa Mesa. All right. Fantastic. So welcome everybody. My name again is Don Kaufman. A few informalities. First of all, this is live and you can ask questions at basically any point along the way. So feel free to fire questions in. I'm reading some of the chat here in real time. People always ask that question, is if this is actually live. It's live. Markets here are live. So welcome. And we'll use a number of different trading applications throughout the course of today's presentation. Just do want to make sure though that everybody is okay. You hear us all right, you see us all right. And excellent. We'll get started. So with that, you are watching Ultima Alert. This is the high probability income generator. My name is Don Kaufman, and you are watching a TheoTrade presentation. There's a risk disclosure. So we are not financial advisors nor broker dealer. Some of us here at TheoTrade did spend extensive periods of time inside of the brokerage world. We haven't been on it in quite some time though now, but yeah, I just threw up the risk disclosure. Good, a couple of housekeeping items here. First of all, this is a skill set. I'm going to jump through quite a bit. For those of you maybe a little newer to the business, newer to the markets, really going to have to focus as I am going to go through a tremendous amount in a rather short period of time. Look, even those of you that have quite a number of skills in this business, I strongly suggest you focus a little bit, turn off Skype chat, maybe whatever else distracting you. Close Facebook, get rid of Facebook. I'm just doing you a favor. Phone's on silent mode. Definitely kick out the kids, the grandkids. The dog can stay, but you took the time to be here. You're going to have to focus because, again, we're going to jump through a tremendous amount in a very short period of time. Next on the docket over here, okay, stay with me right until the end of the webcast, and we will provide you a copy of our expected move indicator. Now, this is the auto expected move, which for those of you that have never seen the expected move, I mean, this is just, it's a tool that we use constantly here at TheoTrade. All of us are using it. It's literally, it's an indicator that drives the market. And before I even show it to you, okay, stay with me again right until the end of this webcast. We will provide you a link to be able to download the auto expected move indicator. It's a $500 value, and it's just something that we use so frequently that we believe anybody and everybody that we discuss this with should have access to this particular indicator, hence our providing it to you. The expected move indicator is literally an indicator that has changed the way that we view markets. What it is, okay, it's how the option marketplace handicaps risk. So just to kind of give you a little bit of a feel for it, when I say the option marketplace, the three lines on this screen, okay, that I'm highlighting, literally right here that I'm highlighting, this is what the option marketplace says the stock can move, okay, on a week-to-week basis. There are just immeasurable number of items that you can do this with. And by the way, I'm not big into using screenshots. I'll just give an example of something like Netflix, and we come over here and click auto expected moves. And again, what the auto expected moves are doing It's showing you the forward future of risk. It says, for example, this is Netflix. Netflix can move up or down. Okay, in this example, let's say $15 between now and Friday. How can you use that? Well, you can learn to actually manage risk, buy stock, sell stock. This is based on standard deviation, but it is not a technical indicator. It's a much more quantitative tool derived from the options marketplace. Again, we will provide you a copy of that right at the end of the webcast. So stick with me to the end of the webcast. We will give you a copy of the auto expected move indicator. All right, onward and upward. As those of you that are just logging on right now, there's quite a number of people still popping in here. Feel free to chat in. I just want you to know where the webinar chat happens to be. I try to make these sessions as interactive as possible. I like when people are asking questions throughout the course of the presentation, and feel free again to interact, because I can walk, talk, chew gum, read, and answer some questions as we're going along. Hope that's all right with everybody. So again, feel free to chat in as we do go along. Look, this is why you're here. So today we're going to talk about Ultima and Ultima trades. And I just want to clarify something right off the bat. Ultima has nothing to do with the terminology of ultimate. Ultima is a type of volatility. So we're going to talk about, if you will, like when I say discover Ultima trades, it's like discover volatility trades that are a deal for the current environment, so you can potentially generate monthly income, right? You're going to learn a trading symbol, okay, in just a moment. The professionals use every single day. You're going to learn how and where to find edge as a retail trader. Very few people conceptually understand what edge happens to in fact be. So I'm going to discuss edge in quite some detail. When I talk about edge, I'm saying something that you can look at and mathematically repeat. It's not about, you know, being bullish or bearish, or the MACD and the Fibonacci and the Bollinger Band all aligned and crossed over at 3 o'clock and yada, yada, yada. This is a mathematical, okay, advantage in here, okay? We're also going to reap the benefits of high probability trades in learning, okay, little known aspects of how not to take large losses, okay? Critically important. So we're going after, obviously, some high probability trades, which I'll discuss here, okay? But more importantly, how to mitigate, if you will, some of the back end risk. And of course, then we're going to find out which products are going to be the most viable candidates, and what products are literally a recipe for disaster, which is critical to understanding this. So before I dive too much into a couple of the trading ideas here, I'll give you guys a just a nickel tour of how I got involved in this business, who I happen to be. Is anyone here, as I'm reading the chat in here, is anyone here brand new, not really familiar with TheoTrade, Don Kaufman, or anything that we've done here? And just, you know, Y for yes, N for no. Like, anybody here brand new? So again, feel free to chat in as we go. Okay, new, excellent. Because some of the names I actually recognize a name or two in here. So as I said, I'll give you kind of the nickel tour of what we do. Okay, so first and foremost, I grew up. People always ask, okay, always ask about how I got involved in the business, or how people get their start in the business. I grew up around it. I actually have family members that actually traded in Chicago. And I literally grew up around traders. I have no idea when I learned about trading, because again, I literally grew up around it. I went to work in the late 90s in Chicago. Only about 18 months after I was working in Chicago, I met an individual by the name of Tom Sosnoff. Tom actually kind of coaxed me to join what at the time was a startup firm. It was called thinkorswim. And I was like, I think number 13 on the crew there. I kind of rose through the ranks pretty quickly at thinkorswim, and I was an executive on the team when we took the company public in 2007. I went on to actually build the entire education division, not only of thinkorswim, but then went on to actually run TD Ameritrade, their education division from roughly 2010 to 2015. Again, it's an interesting run. A lot of the aspects of thinkorswim, we had huge input to it. Looking back on it, again, a nice run from, again, 2001 to about 2015 inside of the brokerage world, where we literally got to see everything that you did. It's one of the most critical aspects about what you're going to learn here today at TheoTrade literally comes from having watched order flow for the better part of 15 years. And what order flow basically implies, the way that when I worked at thinkorswim and TD Ameritrade, the way that we looked at education, okay, wasn't teaching you about trades that we thought were good. The way that we educated clientele and the way that we continue to educate clientele is literally what works and what does not. One of the most instrumental things that you can actually pick up here is, at my time at TD Ameritrade, regulatory requirements don't let you do anything, meaning like the SEC and FINRA, they don't let you do anything. So a group of us, okay, left TD Ameritrade in roughly 2015, and in 2016, okay, we launched TheoTrade. So TheoTrade is not just myself. It's not like a Don Kaufman show here. TheoTrade is myself. It's Jeff Bierman. It's Blake Young. It's Brandon Chapman. Those are just a couple of the individuals. Corey Rosenblum, Tony Rago, okay, Slim Miller. These are all individuals that work here on the trading side of our business, many of which, okay, have come from that TD Ameritrade thinkorswim world. And the reason that it's so instrumental you understand that kind of background, we had access, and I ran an education group, obviously, TD Ameritrade. We had access to everything that you ever did, meaning that we could see all the order flow. And to this day, I still look at order flow statistics, and literally we can study what works, what doesn't. And what we teach here comes from literally watching billions in others' mistakes, but the knowledge of what works best expressly for retail traders. So obviously, it was a nice run at thinkorswim. And now, okay, the new and up and coming thinkorswim is more TastyTrade. TastyTrade is the original founders of thinkorswim. Okay, when TastyTrade was founded, and we've actually built TheoTrade, and we've got marketing relationships with Charles Schwab, which is now TD Ameritrade, with TastyTrade, with E-Trade, all of the major brokerage firms and exchanges. We also have a partnership with the Chicago Mercantile Exchange, the CME Group, all major exchanges for the most part, and many of the major brokerage firms we work with ultimately to establish, a better client broker education relationship. If you ever need to get a hold of me after today, just email me, support@theotrade.com. I use a common inbox. Okay, just put Don Kaufman though in the heading, and that's a little background on me. Here's an appearance I still do. Excuse me. This is the TD Ameritrade Network. I still do a weekly spot on here for about 20 minutes every Wednesday. This is actually, interestingly enough, it's the last time I was in Chicago. Okay. This is one of the more memorable CNBC appearances that I've done. It's myself pitted against Kevin O'Leary. Okay, it's good times out there. This is a much more recent article. This article came out of Investors Business Daily. If you guys are unfamiliar with that, it's William O'Neill. Take a look. This is December of 2022, so it's just about 7 months ago. And we did extraordinarily well last year in the midst of volatility. So this has actually been the quote, which basically led off on this article. Okay, it's ringing profits in a sour market. It's actually been the best year I've had since the financial crisis of 2008. And that was actually the cover of Investors Business Daily. Again, it's the cover of Investors Business Daily in December of 22. So again, it's a little bit of a background about me, and feel free if you guys have any more questions, comments or otherwise. It's always weird maybe talking about yourself, but if you want to know anything else about background of myself or any of the staff here, we're more than happy to share that with you. All of our crew here at TheoTrade have at minimum 15 years of experience in the business, many of which we've traded on the floor. Some of us have actually run, divisions of major brokerage firms, run, floor trading operations, hedge funds, and so forth. So we've got some depth and some serious knowledge here. We are every bit a trading firm as we are into education and alerts, which is exactly what we're going to talk about. So let's get down to it. Let's start to talk a little bit about the markets. So I term this market chaos has arrived. It's not going to abate anytime soon. So is inflation cooling? It's a rhetorical question. Fed pushing interest rates higher. Obviously, Fed's going to talk tomorrow. They're going to raise rates by a quarter point. Strong dollar. This dollar actually is still incredibly strong, even though it's come off a little bit lately, and geopolitical risks are proliferating. The only reason I throw this together and I talk about market chaos or market volatility is just to reiterate the point that it's just game on right now. Look, game on, embrace the chaos. Markets, for the first time in a very long time, got real in 2022. This year, the beginning of this year has seen the largest rally in the history of Nasdaq. By the way, I'm kind of curious, and this has no bearing on what we trade, but I'm kind of curious. What do you guys think? Rally is going to continue, or some sell side activity coming? Come on, are you a bull or bear right now? These are not rhetorical questions. Everybody's got to get in here and answer in the webinar chat. Okay, you bullish or bearish right now? After watching 7 stocks run the market up, 7 stocks run the market up. Okay. There's a couple things I'd love to start with, because when I talk about like embrace the chaos, you want to see chaos? Here's chaos. This is what I'm actually referencing. So this is actually a year-to-date chart. And if you look at the spiders, which is the S&P, okay, are up basically 20%. You look at stuff like Microsoft, which has earnings after the bell, it's up 45%. You look at stuff like Apple, okay, whereas Apple's up 55%. Hold on, then let's look at an entire sector. It's called energy. It's up 1.9%. Yeah. Okay. By the way, energy. Oh, let's go to the financials. Financials are up 3% on a year-to-date basis. Yeah. So when you actually start looking at sectors, and I know that there's the communication sector in this, but basically it's tech versus the world right now. And the only thing that's really up is predominantly tech. You get a little bit in the housing market, but the housing market, you could add up every single housing stock. It doesn't even equal, Apple. Doesn't even equal the market cap of Apple. But if you add up all the financials and you add up all the energy, you know what you got? Bupkis. You got nothing. The entire rally of the S&P 500, it's because of 7 stocks. And anybody tells you otherwise, look, yes, energy has come up. It's been down all year long. It's been down like 7% most of the year. Just came up in the last 3 weeks. If you look at the financials have been down about 5% all year. They just came up in the last, 3 weeks. It's just interesting to look at that, because I'm always curious about people's take on it, bullish or bearish. Has no bearing though over here, no bearing whatsoever. Because one of the things that I like to reiterate, stock picking in Reddit boards, they're not going to cut it. They're just simply not going to cut it, because I have to tell you something about that. Okay. You're going to be a hope, a wing and a prayer if you think you're going to pick the right stocks. Okay. It's next to impossible. Even those of you that are like, I owned NVIDIA. Yeah, right up until you sold it, I don't know, 5-6 months ago when you thought you already had good gains. The bottom line is you're going to need a strategy that embraces some of that chaos, embraces some of the volatility. Okay. I am a very strong advocate, very, very strong advocate, not to rely on directional bias. Look, don't take this the wrong way, right? We're not here today to talk about a MACD or a Fibonacci or a Bollinger Band. Okay, I hope that everybody realizes at this point. Okay, and again, with all due respect, I hope you guys, whether you're optimistic, whether you're pessimistic, it's fine. But I hope you realize that no one right now can see what's going on in the future. No one, right? They don't have a clue a week from now, a month from now, and that's fine. You still, though, have to generate returns. So what we're going to do is we're going to build a strategy here in Ultima that reduces risk while substantiating monthly returns. Okay, for that, we move to Ultima. As I said, Ultima is not ultimate. Okay, it has nothing to do with ultimate. Ultima has to do with the volatility of the volatility. Ultima is actually, where we find edge. And I'm actually going to show you precisely what it is here in the next 5 minutes, we're literally going to show you precisely what Ultima is, okay, why it works, why it's repeatable. And this is something like when we talk about Ultima trades and Ultima alerts, this is something that we have been discussing now since 2020, right? And people go, well, you should change strategy, you should do this. Why? It works, okay? Whatever works, just keep hitting the accelerator, and that's exactly what we do, okay? So higher implied volatility and skew, okay, has resulted in significantly more options premium, makes the options price higher. Ultimate trades are designed to sell options while reducing risk. So one of the things I'll just display really quick to you, okay, this is a symbol that some people know, some people don't. That's fine, okay. I'm just going to come in here. We're going to type in, okay, skew. So SKEW, okay, S is in Sam, K is in kick, E is in echo, W, skew. Right? So what is skew? Well, let's go take a quick glance. Let's open up like a 10-year. This is a 10-year chart. Skew is only calculated at the end of the day. What I want to show you, okay, basically we have almost record-breaking skew. Some of the highest skew we've ever seen, okay? Skew came down a little bit last year, neither here nor there, because when skew goes down, volatility of the overall marketplace goes up. Skew is actually up right now. There's huge edge in today's marketplace, okay? And if you don't know skew, that's fine, right? Skew has to do with like almost like a distortion, if you will, of option pricing. And there's a lot of different types of skew in play right now, including some of the equity products and index products. Nevertheless, okay, it provides an incredible edge to go out and sell options. And some people, okay, are familiar with options, some people are not. And we're going to talk a little bit about learning to sell options. So I got it out of the way. I said the O word. Sometimes when I mention options, people like literally shut down. They're like, oh, take me to a happy place. Take me to my happy place. The reality is, okay, options, great way to be able to make money in this business. Okay, great way to be able to make money in this business, especially in the midst of a little bit of chaos. Okay, and at a point in time where the options, okay, the options have so little risk versus stock. You wake up and a stock is down 10 or 15 bucks or vice versa. But a lot of people, they hear about options. Some of you have traded options, but here's the bottom line, okay? Many people hear through the grapevine that selling options is the way to make money. How many people though have heard that before? Okay, people hear that all the time, like selling options is a great way to make money. Okay, again, a couple of people have heard that. Yeah, so I'm just reading the chat, waiting for you guys to chime in here. These are the, again, the non-rhetorical questions. But the second that people experiment with selling options, okay, what happens is they make money in selling options, and then they make money in selling options, they make money in selling options, they make money selling options, and then one bad incident happens, okay? There was an incident, okay? And what happened? Well, you actually ended up getting absolutely crushed. And on the 4 previous trades, you gave back all your profitability and then some. What people, okay, have an issue with, is it's not making money, it's keeping it. The other issue, okay, and somebody just brought it up in chat, they said selling options takes too much capital, okay? Where you been? The margin now, nominal. Can you say nominal? How about the margin, okay? And selling options is next to nothing. You just have to learn how to do it. That's one of the things that I'm gonna tell people. Just don't fight me on the whole margin thing, because I'm gonna show you during the course of this presentation, okay, that first of all, okay, margin is no longer an issue. The other thing that's no longer an issue, okay, is the brokerage firms. Certain brokerage firms, they've opened up the doors to allow you to do anything you want to do. So people use those like ideas all the time. They're like, I can't sell options because my broker won't let me. Yes, they will. We'll take care of that for you. Or I can't sell options because I don't have enough money in my account. Don't worry about it. We got you covered on both of them. Today's session, we're going to separate myth from real risk, fact from fiction. Okay, we're going to teach you how to sell options very efficiently. Now, for those of you that know nothing, okay, nothing about options, don't worry about it. Don't panic, okay? Do not panic. If you know nothing about options, I'm going to cover just some mild basics. For those of you that are more experienced, I want you guys to understand the presentation today, okay, covers kind of both extremes. I'll start with the basics, go to the extreme, then go back to the basics. Look, if you're new to this, if you're new to it, grasp big concepts, probability, risk. Okay. If you are experienced, I want you to get much more granular, meaning that I've got things like criteria in here. Criteria is, what options am I actually selling? What options am I buying? How am I mitigating my risk? Okay. I'm going to cover all of it. So let's dive right into it. One last, okay, word on here before I go too deep, and that's simply this. Premium can now be sold. Okay. And I'm so adamant about this. And sometimes like I brush it over, but people are talking about it already. So premium can be sold in small accounts under $5,000. You know what the rule is? Okay. Did you know that you could sell options even, okay, naked? I'm not actually saying that, but you could sell options even naked in a $2,000 account with minimal margin. Okay. You can also sell options in an IRA. Now somebody goes, my brokerage firm won't. Well, that's fine. We actually have brokerage firms. You can do anything you want now inside of your IRA. I do it. Okay. I do it. And I'm telling you, I've got a multitude of different accounts in here. Right. This is actually a $5,000 account where I'm selling a boatload of premium, and it's tying up $2,461 in margin. And I'm going to show you that. So we're going to dive right into it. Okay. Two things. Don't fight me on the brokerage firms, and don't fight me on margin. I will show you both. Now, there are many facets to selling premium. Okay. When I say selling premium, I'm talking about selling options. When people hear this terminology all the time, it's selling premium, it's credit spreads, it's bull call spreads and bear call spreads, and it's this and it's that. It's, oh my. Okay, so it's credit spreads and bull call spreads and bear call spreads and delta neutral trading and selling naked and iron condors and mambo combos and conversions and reversals and boxes and jelly rolls. Okay, look, all of it, it's for nothing. It's for nothing. When you say it's for nothing, okay, in this business, and I've been doing this now a long time. As I said, I grew up in the business, but I've been actively trading for 25 years now. In this business, when it comes to options, what do you really have? Okay, you got calls, you have puts. What can you do? You can buy them or you can sell them. What else can you do in this business? Because there's all these different like terms. Somebody's like, no, you must take a class for $500 and learn an iron condor. No, you must take another class and you must learn my MACD, the secret of the MACD. Okay, it gets a little ridiculous because in the end, you have calls and you have puts. You can buy them or sell them. That's it. Can you do anything else in the options business? Well, I could, no. All right. So you have a call, you have a put, you can buy it and sell it. Everything else is just combinations thereof. So take the business, okay, make it easier. Make it easier on yourself. I'll throw this up here real quick. How our members are doing. TheoTrade, unique seasoned trading insights and analysis. TheoTrade, a place with a comprehensive set of resources to study, okay, and exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics. I've learned more about the markets and the economy from listening to Don K. when the Fed spoke than from my graduate studies. All the instructors offer unique seasoned trading analysis and insights, okay, and the chat with other members is exceptional. Lots of shared wisdom there. Okay, you can go as deep as you want or stay as shallow to the shore. Okay, your choice. Takes a while, okay, to make pickles, yada, 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 maximum gain of benefits, but it's worth the cost, time, and effort. My review is based on multiple years of experience with TheoTrade, and that one was actually from June 12th, 2023. This one, okay, A Journey with Theo, highly recommended. Okay, I'm a member of TheoTrade, I think for about 5 years, okay, where I had to unlearn what I had learned in order to learn from real traders. Plenty of reasons to recommend Theo as a great opportunity, okay? 5-star for customer service classes, chat room. In general, highly recommend Theo, okay? I'm grateful for Theo. So, all right, let's get down to it. Let's start to trade a little bit. I really want to like get into this quite deep in today's session, okay? Your trading is always going to be based on, okay, probability. So when you say your trading is based on probability, the one thing that people come here constantly and they say, when you are going to go out and you're going to place a trade, I get emails every single day and people go, how often are you right? And I go, how often am I right? Okay. How often you're right in this business actually has no bearing on making money. I'm going to say that again. Okay. How often you are right in this business has no bearing on making money. You can be right 90% of the time. You can still take a loss. Does that make sense? And the reason that I'm starting with that is one of the things that I've seen the entire financial world bombards you, okay, with garbage. What are you bombarded with all day long? Turn on CNBC. What do they tell? CNBC's out there touting stocks. It's going to go up. I'm bullish. I'm bearish. I'm bullish. I'm bearish. I'm bullish. I'm bearish. What does it matter? I argue you can be right 90% of the time, still lose money. Probability alone doesn't make you money. Okay. Look, there's going to be trade-off. Markets are always trade-off. Higher probability, higher risk. You can be right 90% of the time, you can still lose money. What we're here to talk about, though, is so where you can find edge. Okay. Where you can find edge. And that is what people are here for. At least I hope they're here for, because we're going to show you something very important. Now, I take you to the first example here. Okay, I always set this first example up, okay, identically. I always set it up identically because this is a example I've probably used for about 20 years about selling premium. But I'm going to show you, okay, I'm going to show you exactly where edge lies. And we talk about edge. It's something that you can actually go after in the marketplace, okay, and do repeatedly, meaning that like you can go out there, and when I say repeatedly, you can go out there and mathematically solve, okay, for how much is an expected return off of this edge kind of a thing. So the first thing I'm going to do is talk to you about a call option. This is a stock, okay, stock. And the stock is trading right at 100. Do I own the stock? No. Do I want to own the stock? No. Do I have to own the stock? No. Okay. Why here do I not want to own stock? You guys tell me. All right. All right. Anybody? Why do I not want to own the stock? I think it probably ties up a lot of capital and has quite a bit of risk. I mean, you can tie up even with margin, but you're going to tie up some capital, and if the stock gaps down 90, you're going to lose $10 a share. That would be a catastrophic, move for all intents and purpose. Losing 10% times however many shares you have on looks pretty real. Instead of talking about stock, we're actually going to use options. In this case, I'm going to go out initially, okay, and I'm going to buy a 120 call. I'm going to buy a 120 call. And I always use the same example. And for that 120 call, I'm going to pay a $1 debit. Okay, that says debit. Now, timeout. For those of you, that have maybe never traded a call option before. Anybody here brand new? Okay. Anybody here brand new? Never traded a call option? Anybody? Okay. Who here has never traded a call before? So a call would actually imply you have the right to do what? Buy. Okay. So a call option is giving you the right to buy. Pretty quiet out there. So we're all that infatuated. Okay. Like, I'm into it, man. I'm into it. Okay. I like it. Somebody says it's been 20 years since I've traded options. You know what? It hasn't changed. Okay. It literally, like, it hasn't changed. So, and that's all right. So we're going to go out and we're going to say we're going to buy a call. Buying a call gives me the right to buy the stock at 120. Just worry about call options for the time being, especially if you're new. So we start, again, very, very basic. Within 4 or 5 minutes here, we're going to be into the extreme, meaning that we're going to go from basics and then we're just going to cut to the chase and be like, what? So we're going to go from A to Z, and I'll try to cover everything in between in there too. So when I talk about buying a call, when you buy a 120 call, what's a 120 call give you the right to do, right? So what's a 120 call give you the right to do? 120 call gives you the right to buy the stock at what? 120. Do I have to buy the stock at 120? No. Do I want to buy the stock at 120? No. So why am I buying a 120 call? Just in case the stock goes soaring to the upside. When you buy, though, a 120 call, buying a 120 call, you're paying $1 for how long? Let's say that this trade is good for 3 months. It's a long time. Okay. But still, this stock has to go from 100 all the way up to above 120 just for you to be able to do what? Break even. What's going to happen more often than not here? what's going to happen more often than not? Those of you that have actually taken hits trading options, you're going to know what happens. Okay, stock stays flat. If the stock stays flat, this option will start to decay. If the stock stays flat, you lose $1. If the stock goes down, you lose $1. Even if the stock goes up to like 105, you still lose $1. Stock gets to 110, you still lose $1. The only way you can make money is above what? 120 plus the dollar debit. Am I right? Okay, so what's the fascination with buying options? Tell me, what's the fascination here with buying options? Fascination is, what if the stock goes from 100 and jumps all the way to 130? You have the right to buy the stock at 120. If you have the right to buy the stock at 120, because that's what a call does. If you have the right to buy the stock at 120 and everybody else in the world has to pay 130, your 120 call is going to be worth a minimum of how much? It's going to be worth at least, what? $10. It is what we call intrinsic value of $10. I didn't ask how much you made. I'm asking, what's a 120 call worth? Okay, what's a 120 call worth with the stock trading at 130? It's going to be worth at least $10. Now, okay, is that a likely event? Is the stock going to go from 100 up to 130? It's a 30% move. Okay, I would actually bid you $1 farewell on this trade. I think this is an incredibly low chance of that occurring. So why am I actually bringing it up? Because I think it's important to start with the buy side of options, because a lot of people that they initially experience options, that's the experience that you have. Am I right? Okay, most people, when they first get involved in options, they go out and they buy an option. Okay, and it's very alluring because they say, I bought an option instead of buying the stock. That way I don't have as much at risk, but you really do, because what happens if the stock doesn't move your direction, or even if it does move your direction, I can still lose money. There's so many things, okay, when you're buying options that can go wrong. Now, okay, I'm not here just to tout selling options. I'm not here to tout that. I'm here to tout the right options need to be sold. Okay, and most people are getting this the precisely wrong in this business. They are doing the wrong types of trades, and I'm going to display that right now. So I'm going to go out in this first. Now, this example is going to be a lot more real, and then we're going to take it into the marketplace. I'm going to go out, okay, and I'm going to sell a 120 call. I'm going to sell a 120 call, and for that, I'm going to collect exactly a $1 credit. Now I'm going to take it down here, and we're going to make this 3 months of time, okay? Meaning that this call is going to be good for 3 months. So we're going to sell a 120 call. We're going to collect $1 credit. Time out. Stop right there. When you sell something for $1, if you sell something for $1, what's the most you can possibly make? Anybody? Sell something for $1. What's the most possible you make? $1. Or if it's options are traded in contracts, $100. Now, I initially show you this trade, and I say, stop right there. People are figuring it out right now. They're like, wait a second. You're only going to make $1, and I got to wait 3 months to make that damn $1. I don't like this strategy. No, you're not going to have to wait 3 months. Okay. But I'm trying to get to something. Okay. And here's what I'm trying to get to. We've been convinced, okay, by who? All right, by people on Reddit boards that live, okay, in mom's basement, that selling short duration options is a viable thing to do. The interesting and ironic thing right now of the marketplace, the edge, when I say edge, mathematical like way of making money, the edge is dramatically against you in short duration options. And I will show you exactly that, okay, in just a moment. There's no edge. In fact, the edge is against you in selling. People talk about 0 days to expiration, okay? 0 DTE options. People are getting annihilated in selling short duration options. I'm going to go out 3 months and I'm going to sell an option. I'm going to show you exactly why I sell the option. So I go out, okay, and sell an option that is 3 months out. Now, then what do? Just time out. Let's just say I just stopped right there. Okay. First of all, don't worry about margin, because for those of you that understand this trade in a standard account and everything, this would tie up a lot of margin. You go, I don't have the money to be able to do that, or Charles Schwab won't let me, Chucky won't let me do it. Okay, we'll take care of all of that. But you're going to go out and you're going to sell a 120 call. Why am I selling it? Like, first of all, I'm selling an option that's 20% out of the money. 20%. You know, what do you mean 20%? Look, okay, from 100 up to 120, that's 20% move. Like, I'm in the nosebleed seats. I'm not even in the nosebleed seats. I'm in the tailgate party. I can't even see the inside of the stadium from over here. I'm so far out of the money. What can happen to this stock? Well, the stock can stay flat. Is there a probability the stock stays flat? There is. Okay. Is there a probability the stock goes down? There is. That's no problem. Stock goes to 90, keep a buck. Stock stays flat, keep a buck. Stock goes up to 105, keep a buck. Stock goes up to 110, okay, keep a buck. Even if the stock goes to 120, you're still going to keep your buck. You'll probably wet yourself, but you're going to keep a buck. How do you lose money on this trade? When you get above 120. By the way, fair enough. Okay, I can lose money on this trade. You can lose money in every trade. There's no free lunch out there. People have been looking for it for years. I would like my free lunch, please. Okay, ain't no free lunch. Ain't no free lunch. So the stock can actually rally and rally huge over here. Predominantly, you're going to keep your dollar. Why? Because this is an incredibly high probability trade. But of course, everybody's thinking about it. I don't want to hold it for 3 months. That's painful. So time out right there. Are we comfortable just with the logic here? What's the logic? I sell something. I understand that I can sell a 120 call. Now, when selling a 120 call, I'm selling something that I don't even own. I'm selling myself into an obligation. Do I own stock? No. Do I want to own stock? No. So I'm just selling a 120 call. And if I sell a 120 call, it obligates me to give somebody stock at 120. You go, but I don't even own stock. All right, so what happens? If the stock stays flat, the 120 call would expire worthless in 3 months. If it goes down, it expires worthless. If it goes up to like 105, it expires worthless. Yeah, where you get in trouble, what if the stock goes from 100 and jumps all the way to 130? Okay, problem, big problem. Okay, big problem. Okay, anyway, what's the problem? Somebody has right to take stock from you at 120, but the stock's now trading at 130. You'd have to buy the stock at 130 to give them the stock at 120. You would lose $10, but you originally received a buck, so you'll only lose 9. Okay, all right. This is critical. It's critical. Just understanding, conceptually understanding, okay, this is critical. So can I take a loss? Yeah, I just showed you I can loss. The stock can go shooting up, but the stock usually doesn't jump from 100, okay, all the way to 130, and we'll mitigate that in just a second. So stop right there, because everybody looks at this and they go, that's not bad. Sure, you can make some money on it, but okay, why so far out in time? Because that's what everybody's like, well, sell options so far out in time is going to take forever, man. That's exactly why you're tuning into this. You're going to tune into this because I'm going to actually show you right now what Ultima is. See, people always talk about options in terms of what we term theta decay. How many people have heard that? Theta decay. Okay, what's theta? Theta means time. All right, time. It's that's really, I'm really piss poor at drawing on here. Time. Okay, time decay. And time decay works like this. The closer you come to expiration, hold on, the closer you come to expiration, the options decay exponentially. How many people have heard that? Huh? How many? How many people have heard that? Okay, it's true. It is true. I'm just curious. All right, it's very quiet in here. Okay, you're making me very nervous. So everybody hears about time decay, and they always want to sell short-dated options because somebody tells you about time decay. What if there was another type of decay? A decay you didn't even know about, okay? A type of volatility decay, that volatility actually decays, okay? I appreciate the honesty in Tammy. She's like, I'm taking notes, right? What if there was a volatility decay? And the volatility decay actually is how we could make our money, not theta decay. That's actually what Ultima is. Let's go to it. We're going to go for that. We're going to go to a live market, okay? All right, so initially I'm going to use thinkorswim. By the way, I use thinkorswim and TD interchangeably. Okay, and when I say interchangeably, I literally go from platform to platform. They're built by the exact same developers, creators. Okay, they're two totally different firms. They're built like, you know, decades apart. But TD is the up and comer right now. But for those of you, probably the most prolific platform ever devised is right here. It's thinkorswim. So how many people trade on thinkorswim? How many people trade on Tasty? You could just put in Tasty thinkorswim. Okay, thinkorswim. You can actually, you don't want to type it out, you could put TOS. Okay. See, Tammy put her pen down and now she's actually answering over here. I use both. It's fine. I'm always curious. All right. So I'm always curious. Yeah, most people both. IB in Canada. By the way, in Canada, early in the year, early next year, Tasty will be in Canada. So they are going to make a big dent. Tasty is actually owned now by an English firm called IG, which means they're into the Commonwealth, which means they're coming for Canada. The first example over here, cool. A lot of people use both. And again, I'm like, you'll notice like the logic of it's like interchangeable and so forth. And obviously it had a lot to do with building thinkorswim. And the logic to me is like basically the same for cruising back over to Tasty. You know, it's just very interchangeable for me. So the first trade I'm going to do, I'm going to come in here. I'm going to talk about spiders. If you're not familiar with spiders, okay, the truth is, what are you hiding under a rock? It's the spiders. It's the most prolific product. Okay, the most prolific product ever devised. In terms of the spiders, right now, they've already done 2.5 million contracts today. And by the way, that is light and fluffy. That's really, really light contract size for this time of the day. But we're going to go 115 days out. I'm going to torture each and every one of you individually. We're going to go 115 days out for my first example. And I'm going to go out and I'm going to sell an out of the money call. Okay, let's just do something around $1. It's just easier. Okay, I'm just seriously, I'm just fed up today. We're just going to go easier, and we're going to go out. Let's draw it up here. I'm going to go out, and I'm going to sell, and I'll put it up here. I'm going to sell, okay, a November 17, okay, 500. That's a 500 call, and I'm going to collect. I can easily collect. Let's call it $1.13. Right? So I'll collect $1.13 credit. Now, can that actually be done? When I say can it be done, I'm not trying to be facetious. The way the market is, $1.12, $1.13 right now. So I'll work a trade. You can see the market's $1.12, $1.13. I'm going to work the trade at $1.13. So I'm working on the offer. Am I going to fill immediately? No, I am not. Okay, I am not going to fill this immediately, but I'll show you. Okay, an order flow designation up here. That's me right there. Captain One Lot runs again. And my one lot is sitting right in that little Z exchange. So Captain One Lot, I own the marketplace. So you can see my little one lot fluctuating. Oh, I'm next in line. We're gonna fill. We're gonna fill, man. Okay. So if the market makes the slightest move, all right, it's gonna fill. Anyway, with that. Okay, I'm working the position. I'm going to sell the November 17, 500 call. Then what am I going to do? Okay, let's just go out and let's preface the discussion. I'm going to sell the 500 call. Now, if you sell the 500 call, you're giving someone the right to take stock from you at 500. Where's the stock presently? 455. And that is a long way out of the money. Okay, this is the spiders, by the way. This is not a stock that can just gap up. This doesn't have a Timmy Cook running it. Okay, it's got what 500 stocks in it. It's close enough though. Tim Cook actually does have a lot to do with it. He's filled. The fans go wild. Anyway, okay, let's assume now that I filled it, which I have. And after I've got a little position on there, then what do? I do absolutely nothing. Everybody's doing something. I'm going to do nothing. Am I going to sit for 3 months? No. I want you to look at this trade. Okay, all factors being held equal. Let's just assume, for argument's sake, that the stock stays completely flat, which it won't, but just assume, okay? I'm going to look at the 500 call 115 days from now. It's trading for $1.13. Let's look at the 500 call when there's only 87 days left. Why? Because it's like fast forwarding. By the way, what's the difference in time between 115 days and 87 days? Okay, what's the difference in time between 115 days and 87 days? What is that? It's 28 days, right? It's 28 days. So the question is, am I right? All right, it's kind of quiet out there, okay? Because, you know, I want to make sure that everybody's on the same page. So question is, what can I actually make in 28 days with all factors being equal? Because everybody always tells you that there's no option to decay that far out. Yes, but that's what Ultima is. Options actually do decay, and they decay very rapidly. Remember this little guy over here? Okay, that's time decay. I don't need time decay. Where we're going, we don't need any roads. Where we're going is actually, okay, Ultima. And what Ultima does is this. I'm going to look at, okay, the exact same option. We're going to go out to the 500 strike, okay? We're going to look at the 500 strike right there. Okay. And 28 days from now, we're going to buy it back. This is assuming that all factors being held equal, volatility is the same. Okay, just fast forward exactly 28 days. Assuming 28 days from now, the market is where it is right now, I would turn around and buy this back. Okay, I would buy the November 17 500 call, and I would buy it back for approximately, even if I paid the the offer right now, 49 cents. What am I making? What am I making? You guys tell me, okay? You should be able to make approximately 50, okay, to 60% in 30 days, okay, or less, right? You're going to make between 50 and 60% in 30 days or less. You go, holy crap, how is that even possible? I have a better question. Holy crap, why are you not doing it? Ultima has been there now for 3 years. Okay. The option market has changed a lot, like skew has actually changed. Volatility has changed dramatically. There's a crap load of papers, what we call white papers, out in the industry in this. So few people are taking advantage of it. And the margin, somebody just asked about margin, is nominal. I can do this trade with as little as $600 in margin. Okay, and we'll talk about margin because it's critically important. There's no question about it. So we can do this trade with very, very nominal amounts of margin. What I'm showing you though, okay, is instrumental, that there is, in fact, a tremendous amount of decay. Okay, but the type of decay we're going after is not time decay. Okay, it's more of a volatility decay. Okay, and again, when people are looking at this, they're already asking, why am I not selling puts? Of course I'm selling puts. I'm just trying to make the example easier with calls. Okay. And it doesn't matter, you know, we're like immediately people thinking, well, the market's up, man. You should be selling this. Or you should be selling this. No, you shouldn't think that way. You don't know that the market's up. Okay. You only look now and say that the market's up. Hindsight is always 20/20, right? But again, you're going to look back on that and that ain't going to always be the case. One thing you got to get into your head, right? I'm showing you, okay, again, within 10 minutes, what Ultima is, that there's this incredible decay rate. And even if the market moves dramatically against you, okay, the option's still decaying at a phenomenal rate. Does that make sense to everybody? All I did was showed you the 115-day options and then showed you the 87-day options and said, what if, okay, the best way to price options is to look at other options. Now, can you do it in other products? Of course you can. Right? I'll go to the jump to the QQQ because the Qs are incredibly volatile this year and volatile to the upside, but using the same type of example. And you can see I've got positions all over here, but in the same example, if I go 115 days out, okay, and I'm just going to find an option, just hang with me. I'm just going to find an option trading right around $1. Here you go. Here's the 440 calls. So if I were to sell, okay, the 440 call for $1.15. Okay, and this one is also of the November 17th expiration. If I sold that for $1.15, what is the 440 call worth exactly 28 days from now? Survey says, okay, the 440 call is worth 54 cents. So I should be able to buy it back. Okay, and it'll cost me, let's make it 54 cents. Am I still in the wheelhouse? Yeah, it's between 50, okay, to 60% profitability. At that point, okay, what do you do? At that point, what do you do? When you look at this trade, what comes to mind? what comes to mind when I say, what do? You go, okay, you can make between 50 and 60%. Okay. The whole key over here is do as many as you possibly can. Rinse, repeat. You got to use your capital efficiently. The most efficient use of capital, okay, is going to be the most critical thing. And I'm showing you exactly what products, okay, this stuff can work in. Like there's no if, and, or but about it. The S&Ps, a little bit of Nasdaq. You're not going to see me jump in here and be like, "Is Tesla, man? Tesla's the way to go." Okay, what do you have, a death wish? Who cares? Like people have to be like, "Oh man, I really want to trade like GameStop. Oh, I want to be the in crowd." Okay, living in mom's basement at 45 years old, trading Tesla or GameStop is not a good idea. It's just not a good idea. And the reality is, okay, guys could be doing this all day long, right? Why sell options so far out in time? Because there's amazing decay. That's what Ultima actually is. And the one thing that I want to show you, okay, when I'm dead serious about this, what people are doing in the markets right now is they're selling short dated options. People will hear about what they call zero DTE. How many people have heard about that? Okay. By the way, don't worry about the Qs going up or down yet. Don't even worry about it. A lot of people are using what they call zero DTE, which is 0 days to expiration. They're selling really, really short dated stuff. I cannot argue against that. Even like it's just, think about the risk in this week. There's Fed coming out, but push all that crap aside. There's no edge in doing so. The options themselves, okay, the market just basically moves, you're dead. You think the market can't get to 459? I'm selling the 500 strike, okay? But there's no edge in the short dated options because the skew is not there. This has a lot to do with skew. So I'm selling options far out in time, okay? And typically traders sell short dated options because they're thinking about theta decay. We're not thinking about theta decay, right? We're thinking about volatility. Ultima is the volatility, right? And it's actually a type of, if you will, of arbitrage. Now, are we okay at this point? Now, we're not just going to rest on our laurels and just stop right there. The key point in here, and I want to draw it up a little bit for you, okay? People get very infatuated with the chart. Why are you selling calls, Don? The market is going higher. Why are you not selling puts, Don? Okay, listen, we're not new. We look at the marketplace very, very, okay, equally, if you will. So we're an equal opportunity exploiter. This is the market. Let's say the SPY right now is trading 455, which it is. I'll sell stuff up here and I'll sell stuff down here. And people say, when you rally, this stuff makes money. And when you rally, this stuff loses money. But even though we rally, this stuff still decays. Because as we rally, the volatility goes down. And what if we sell off? This stuff starts losing money, but this stuff makes money. We're always playing on both sides of the marketplace because margin is held here and margin's held here. Okay. Now, for those of you that are concerned about margin, who here is concerned about margin? Anybody? Okay. Who's here concerned about margin? Margin, and somebody mentioned IRA accounts. First of all, let's go right over here to TastyTrade. On TastyTrade, this is a standard $5,000 account. And I am in a $5,000 marginable account, okay? And in this particular account, I want you to look, first of all, I've sold 3 of the 4,900 calls, okay? What if 3 of these tied up $2,400 of margin? It's actually $2,461, but I'm just trying to make it easier. It tied up basically $2,400 of margin for a 3 lot. That ain't bad. And you say, oh, well, what is that? What are you trading? I am trading the /MES. You go, what is the MES? It's a micro S&P. Okay. So a moment ago, we were trading what? Spiders. We're trading spiders. Yeah, forget the spiders. Just trade the ES or the MES. Why would I trade this or this over this? Do you realize that the margin on these products, okay, is about what? Oh, it's anywhere from 1/6 to 1/8 what it is in the spiders. Okay. Did you know that the day trading margin rule doesn't exist here? Okay. It's the micro options. The micro options, and they trade exactly like spider options. Okay. How come everybody doesn't know that? So the things that I always love to point out, like I like to exploit, people think they've been in this business for a while, they kind of know the business. Okay, how come you're not trading these products? And if you are trading these products, it's good because you're in the minority. You're totally in the minority. These are some of, by the way, the MES, it's a brand new product. Okay, type in here /MES. It's a relatively new product. Look how many options are now listed in here. You want to know why there's options listed in here? Because of us. We had them listed, right? These are products that we actually helped develop. And I want to show you, see the little dots in here? Okay, those dots right there signify that we here, okay, at TheoTrade have positions. And I want to show you, when we do a trade, okay, people trade with us, right? When we do a trade, people trade with us. So take a quick glance over here at what is called like open interest to show you how many contracts are open. 730 there. Okay. This is actually one of our, this is actually the small portfolio. 770 there. Okay. This is us. When I say us, this is us at TheoTrade. There's almost 1,000 contracts here. Okay. And this is almost a brand new product. What I'm trying to show you, this is a product. Whoops. Okay. This is a product that allows you to trade. Okay. It allows you to trade with very, very nominal amounts of margin. Here's something I'm teeing up right now, would tie up $900 in margin, but I already have a lot of positions in here, okay? I can also do this inside, oh, I apologize, this is the IRA, okay? That was my IRA. The IRA will actually tie up more margin. In a non-IRA, that position only tie up, look, the buying power effect is $473, okay? To sell what? One contract. Okay, $473. You can't say that you can't do this. Everybody can do it. In a margin account, okay, it'll tie up $473. In an IRA, and this one is an IRA, and you go, how do I know it's your IRA? You want to see? Okay, it says SEP right there. Okay, that is a SEP IRA, and I absolutely unequivocally can do this in my SEP IRA. Right? And my buying power reduction on here is right there. It's $940, even inside of a SEP IRA. It's critically important. Look, what we're trying to do over here, okay, is teach people sell options further out in time. Then the key is, well, we're getting to that, right? So you can do this with nominal amounts of margin. You can do this inside of an IRA. The key to the strategy, right, is how to actually build the trades. And that's exactly what we're going to talk about. Before I get there, okay, we need to look at the dark side of this business. The dark side of the business is, it's easy, it seems easy enough. And once I learn how to do this, okay, you just hit the accelerator. It becomes much more about like an inventory management. We're not going to go out, and I don't want you to think this, we're not going to go out and just sell one option and just leave it, and sell one option and leave it and take it off. Okay. And I made 50 bucks here, 100 bucks there. I made this here. Okay. What if you could actually go out there, splatter a couple of trades, be able to make a few hundred, a few $1,000s, depending upon how much risk. Okay. But before we get there, we need to talk about 90% probability. The trades that we're doing have an incredibly high probability associated with them. Okay. I say that again. The trades that we're doing have an incredibly high probability associated. Okay, I started here on thinkorswim, and I started by looking at the what right here. I've got the position on, right? This is the 500 call. Did you look at the probability in there? The probability of it being out of the money is 92%. Okay, it says it right here. This is probability OTM. OTM means out of the money. There's about a 92% chance that the option that I'm selling is going to expire worthless, but I'm not going to hold it for 115 days. I'm only going to hold the option. I'm only going to hold this option for what? Yeah, maybe 30 days. Okay, maybe 30 days. So I hold it for 30 days. Then what do? Just move on to the next option. I implore you to understand though, you still have to worry about what if, okay? What if the trade goes against me? Because what happens to people in this business, and some of you have actually had this, okay? Those of you that are in here right now, right? There's a good number of people in here, but those of you that are in here right now, how many people have sold options, made money, sold options, made money, sold options, made money? I did an iron condor, I made money. I did another iron condor, I made money. I sold more options, I made money. I built up my account and I started doing bigger trades. And it's like, bam, you get hit and you're like, oh, then you only give up not only the profitability of the previous 5 or 6 months, you give up like half the account value. You're puking on the floor. Does this sound reasonable? It's a total train wreck. Okay, people get absolutely wiped out. You know how many years behind the screen at like thinkorswim we used to watch this crap? We're like, it's like watching a horror movie that you like can't stop somebody. You can't like call somebody out of the blue and be like, lady, don't go in there, there's an axe murderer. But that's what it feels like. Like I've watched it so many times. And by the way, I put on here on my slides, like, I know it's like I can see your account. Yeah, for 15 years I could. Everything that you've like, and I don't mean to be, demeaning by this, but everything you've ever thought, okay, every move that you've ever made on your trading application, people, I've seen it all before. It's like a doctor. You're like, I've seen it all before. It's like, you're not going to show me anything that's going to shock me these days. Like I've seen everything. I've seen all hell break loose. Okay. I had to manage firm-wide risk at thinkorswim during the financial crisis. When I lived at the time, I was living in Scottsdale, Arizona, working for a Chicago-based firm. I used to jump on an aircraft, go back. When they call you up on a Sunday afternoon, they say, get on a plane. You're like, oh, this is not going to be good times. Not going to be good times at all. I basically spent, a couple of months in Chicago managing firm-wide risk. There's nothing I haven't seen. And with the like selling premium, people make money. You get hit, they get pummeled. Okay. And then they never come back from it. And then they go, oh, they take like a class to learn how to do this. And then they eventually get killed. And then they turn around and they go, I was on to something, I can fix it. That's the really degenerative way to go. Like I'm such a cynic about fixing trades. People always think that they can fix everything. I can fix this. I can fix this. It's only an arm, like, yeah, if you lost your arm, you're probably not fixing it. You can kind of stick it back on there, maybe a little glue. It's good. Okay. Anytime you fix a trade, did you realize fixing a trade, more transaction costs? Forget that crap. It's more risk. Unequivocally, you cannot fix anything without adding more risk. What's the first thing you learn in this business? Don't add risk to an already losing trade, right? Don't add risk to an already losing trade. You're like, oh yeah, that makes sense. Some fixes may work, but the very notion of fixing actually throws more good capital after bad. It's chasing. It's brutal. Look, we're going to teach you to do this right. Okay, you got to learn to do this right. Structurally got to learn to do this right. Because what most people do is they try to fix losing trades. That's like taking a car, driving it off a cliff. Take a car, drive it off a cliff, and bring it to a body shop. What are they going to tell you? I'm probably going to be looking at the car and be like, that's a piece of junk. Okay, there's absolutely nothing I can do. It's a piece of garbage. As I said, we're going to learn to do this the right way. And what's the right way? Okay, and I don't like to say like the right way is my way. Yeah, forget that. That does not that doesn't play well in my book. By the way, standing up over here, I got the sit stand desk. I can't sit anymore. So it's hot here too. It's hot. Okay, very hot. It's not as hot as if you're in like Phoenix right now. I think it's like what, 115 or so. Okay, it doesn't get any hotter than about 87 here. Oh yeah, I'm Virgin Islands. We're actually going to learn about a little bit about inventory management. When I say inventory management, the key is this. Okay, we looked at the spiders a minute ago, and I'm actually going to write this up over here. We looked at the spiders. Okay, and here is the SPY, and it's trading at, let's say, 455, right? We're going to sell some out of the money junk. What's out of the money junk? Well, okay, we could sell like the 500 call. Maybe we could sell the 510 call. And for each of these, we're collecting $1 and collecting $1. And then sooner or later, we're going to turn around, we're probably going to sell, I don't know, 360 put. By the way, the puts are going to be trading for double. They'll be trading for like $2. We'll end up eventually like selling, I know this is out of order, but like a 370 put, collect another $2. Okay. The point that I'm trying to make, first and foremost, we're not just going to sell calls, we're also going to sell puts. Why do I not initially mention puts? Because puts confuse people. Okay. People are like, I'm buying the right to sell. I'm selling the right to buy. No, you're selling the right to sell. You're like, I can't take it. So puts are actually trading for a significant premium. But here's the cool thing. When it comes to margin, okay, margin, if it's held up here, here's margin. If they hold, let's say, $1,000 of margin for these two trades, did you know if you sell these They don't hold any margin, meaning that because you sold here, you're not holding up margin here. And you go, why? Because these two trades are inextricably linked. Okay. If we go up, you can't lose here. If we go down, you can't lose here. So people go, what if the stock splits? You're like, oh crap. All right, look, stock splits, it means it splits down the middle. It doesn't mean the stock goes up and down, right? It'll go this way or that way or both ways. Was that a scarecrow or was that the lion? I can't remember. Anyway, okay, I think it was the scarecrow because he doesn't have a brain, right? It goes both ways. Anyway, the fact of the matter is it only holds margin on one side. So you're best suited to sell on both sides of this, okay? The thing that I try to stress to people, okay, about trading like this, and you're like, oh, I'm selling here and I'm selling here, okay? This is like inventory management. When I say inventory management, right? You know that you can make about 50%. You can make about 50% on one of these in about 30 days. From that point forward, it's hit the accelerator. You got to figure out how to do as many as you possibly can, because it's like, here, this is a cup, okay? Let's say that this cup, I can sell this cup, right? It's a very nice cup, okay? It's whatever. I can sell this cup online for $10, okay? I can sell this cup online for $10. I can turn around and buy it elsewhere for $5. How many cups do I want to do? Okay, think about that. And again, it's not a rhetorical question. Just jump in here. So I can sell this cup online for $10. I can buy it elsewhere for $5. At that point, I want to actually trade through as many cups as I possibly can. I got to get through inventory. So if I go out and sell the cup for $10 and I sell another cup for $10 and I sell another cup for $10, then I'm actually buying them, packaging them, getting them out the door. Before I know it, I've got myself a business. Okay. There's going to be some expenses associated with my business. What are some of the expenses? There's probably going to be some insurance. Before I know it, I have to hire somebody because I got too many cups over here. Cups are stacked up everywhere. I got to mail them out. Okay. It's, again, you start to get a little bit of overhead costs. No. Okay. Trading is no different. Trading is no different. Look, okay. You want to think of selling options premium. I'm going to blank this out. You want to think of selling options premium, not as going out and putting on one trade, okay? We want to get you in the notion, okay, of what inventory, again, inventory management happens to be. In the end, okay, in the end, what is trading really about? In the end, trading, okay, is deeply, deeply associated, okay, with none other than inventory management. Okay, trading becomes inventory management. The more inventory I can get through, 50%, 50%, 50%, 50%, the better I'm going to be. Okay, what's the one thing though that we're missing over here? And I'm going to bring this up right now. Okay, I can go out and I can sell the 500 call and I can sell 510 call, and sooner or later I'm going to sell a 370 put, okay, and I'm going to sell, right, a 360 put. And here's the market. Sooner or later, what's going to happen? What's going to happen if I continue to do this? You guys tell me. Anybody? Anybody at all? Okay, I'll tell you exactly what's going to happen. You're going to have a catastrophic move, either higher or lower, and the big risk, okay, comes to the downside. What happens to people in doing this is they just get complacent. You know, here's the marketplace and spiders are sitting at 455 and it's okay, man, it's okay. And one day they wake up and bam, the market's trading at 400. Okay, something dramatic happened and just get crushed. We are going to mitigate that exposure. We're going to control the risk. Okay, when it comes to, for instance, the inventory management business, and I was talking about cups, and you're going through cups, you've got a cost of doing business. Okay, you know what, if you have employees, you have to have insurance on those employees. Okay, you got to have all kinds of like overhead costs of the cost of shipping the cups out. In trading, okay, there is going to be one very definitive, although small, but definitive cost. It's a hedge, okay? Do we have to hedge? Absolutely, unequivocally, yes, okay? We're going to hedge. Now, before I get there, I want to show you, again, I intend not to just sell calls, okay? I am also going to sell. As a moment ago, I was showing you puts in here. And we were way out here. And what was I talking about? 370 puts and 360 puts. And look how much the puts are trading for. Okay. Look how much these puts are trading for. They're like double. And that's exactly what we're going to display. So with that, now, here we go. I'm going to show you, if you will, a little bit of what I kind of call like the full Monty. How would I really put this trade on? You know, enter the hedges. Okay. Hedges are a necessity. Without hedges, we can't operate. Why? Hedges, okay, although very, very minuscule. In fact, in no uncertain terms, I can even show you how to get hedges for literally next to nothing in the business. But hedges are a necessary evil. You know, it's like living on an island with a volcano. Every, 6 weeks, you walk up to the top of the volcano and you throw, okay, a sacrificial lamb into the volcano. Why do you do it? To not anger the beast, okay? Inside of the S&Ps, well, here you go. This is SPY. And SPY is trading right at, we'll say 455. Well, here's the SPY, and you're going to go out and you're going to sell, okay? In my original example, I was showing you the 500 call will collect $1. And before you know it, market will rally, be selling the 510 call, okay? Collect another $1. Before you know it, you rally even more. We might even be, okay, selling, for instance, the 515 call and collect even another $1. There's at least 3 trades up there. Simultaneously, you might be selling like 380 puts, collect $2. Okay, sell the 370 puts, collect $2. And again, as the market kind of goes up and down, sell, for instance, the 365 puts, collect $2. Okay, but again, the risk in here would be huge, because if you have that fast move up and the fast move down, you will never be able to react fast enough. Okay, no one can survive a vicious move to the upside or the downside. Enter the hedges. There are 3, okay, types of hedges we often use. One of them is an RTS, which stands for risk twist. And the next one, okay, a VIX vol spread, which we also call a VVS. The third one over here, what we term a gamma iron. I'm actually going to show you a very, very powerful, albeit very small hedge. I'm going to lay a hedge right here. Okay. What do you mean I'm going to put it right there? And that hedge is going to be called a VIX vol spread. What's a VIX vol spread? For those of you that know the product VIX, what does VIX do? When the market goes down, and I'm not talking down softly, when the market really goes down, where does VIX go? Market goes down, VIX usually goes boom, up, okay? It goes up. We will have a VIX volatility spread on. Should the marketplace absolutely unequivocally collapse, what happens is as we come down, the VIX spread, okay, literally puffs up and opens up like an umbrella. Okay, poof, and it's protection for the foreseeable trades on the downside. Most of the downside risk is mitigated. Is it 100%? Absolutely not. You're always going to take some risk. Okay, even with buying an insurance policy, there's still going to be some risk. But I'll tell you right now, you can't operate without something like the VIX vol spread. That's how you're going to look at downside risk. To the upside, we use what's called a gamma iron. And what the gamma iron is, okay, it's a trade where if we rally huge, you actually have to pass through an upside, okay, hedge before you would actually take any risk on any, okay, of these short calls. This is what trading really is. This is what inventory management really is. That can be done in an account, okay, with 5,000 bucks in it. That's an IRA. An IRA with 5,000 bucks in it, you can do that. With $2,000, okay, although very minuscule trades, even with $2,000 in your account, you can actually do this. You go, but, well, there's margins nominal. It's between 400 and 600 to place, okay, one of these little legs right here. And then the VIX spread, it's nominal. It's very, very nominal, okay? That, people, is a trade. That's inventory management. Instead of out there, and again, the analogy is just perfect. You're selling cups for 10 bucks, turning around, buying them back for half the price, okay? In this case, okay, I'm selling options for 10 bucks, turning around, buying them back 28 days later, and then just trying to churn through as much inventory as I possibly can. You know, when I try to initially make this, you're like, oh, I got 3 of these on and 3 of these, okay? Looks complicated. Unless, of course, we just sent you a text message every single time we traded. We'll just send you a text message when we trade, okay? Everything from the hedge to how many contracts we're actually using, okay? To which calls we sell, which puts we sell, the exact price, the execution time, everything, right? This, I don't leave anything to chance. We trade this stuff. Why not? It's one of the biggest differentiating factors that we started doing this year. When I say this year, you know, what you're watching over here, okay, is not Ultima spreads or anything, okay? It's Ultima alert. What we now do here at TheoTrade is provide you real-time alerts for every trade that we're doing, every execution, every hedge, every nuance. It's no holds barred approach. That's one of the most critical things that we provide over here, okay, is again, that no holds barred approach. Look, what I'm showing you right now, okay, it's not going to eat a tremendous amount of time. The premium can be sold in accounts that are small, $5,000. You could do it in an IRA, okay? Produces positive decay, may enhance existing positions. What that basically implies is you don't have to do this as a standalone strategy. If you already have stock or some other positions on, you could even trade around those positions, provides a high probability of success. We are never, okay, needing to buy or sell stock. If you already own stock, fantastic, whatever. We can trade around it. You can be wrong though on market direction and still produce very profitable trades. Again, I'm going to reiterate that you can be wrong on market direction because that's not what this is about. And I say this with all due respect, you need this in your life. I don't know what the future holds. Some people are a little bullish in here. Some people were bearish. It's interesting to look at that. Interest rates continue to go up. Okay. It's tough. It's chaos right now is what it is. I mean, most of us are probably looking at markets and thinking the exact same thing. Like, I can't believe we got this far, this fast. Okay. I can't believe it, or I really, truly can't believe it because it's ridiculous. Look, selling premium could potentially bring in consistent returns, excuse me, while minimizing your risk. Okay. We're going to learn how to do this. We're going to learn how to do it the right way. Before, okay, we're going to discuss a little bit about criteria. All right. For those of you that don't know what criteria is, everything that we do here, okay, at TheoTrade, these are what we term criteria-driven trades. What that simply implies, when I say it's criteria-driven trades, everything we're doing, okay, is based on a very finite set of criteria, rules, if you will. Step 1, step 2, step 2, step 3. And we're actually going to show you a little bit about that criteria. Okay, before I get there, I'm actually going to show you live trades. Now, okay, here are a few live trading examples. First of all, these examples are all placed live. I've executed every single one of the trades I'm about to show you, okay? Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts, okay? Again, everything, okay? Everything can be done inside of smaller accounts, inside of retirement accounts. The first trade, and I'm kind of poking fun at Tesla and poking fun at myself over here for a second. I just wanted to actually show you this, okay? What you want to look at in here, and I see some of the questions coming in. I will get back to those, okay? By the way, there's no assignment risk. There's nothing like that. There's no assignment risk in here. There's no timing skills. It has to do with expected move, but we'll get in there. With something like Tesla, what I am showing you in here, okay, is this is going to be 18 months, 18 months, okay, of results of doing Ultima. We're going to show you 18 months of results thereafter, and this starts literally, okay, January of 2021. The reason I started in January of 2021, what happened in January 2021, okay? The market went straight up in 2021. In 2022, it went straight down. This year, we're straight back up. The irony is the directional bias is kind of nominal. We do take into account some directional bias, has to do with what we term expected move. What you're looking at though, right here, okay, this is a screenshot. When I say a screenshot, this is the opening transaction, the closing transaction, the exact time and date of the trade, what I traded, the strike I traded, a call or a put, the opening price and the closing price, and the return on the trade. Okay, when I say it's a screenshot, where did it come from? My screenshot actually came from thinkorswim. So if we take a look at the account statement, like that's spiders, probably the biggest trade I'm doing now in the portfolios is right here in the ES, okay? Over the last 360 days, I'm just going to show you. Here's in the ES, it's 360 days. Everything that we do here at TheoTrade, I'll show you every transaction. When I say it's a no holds barred approach, like, look, to show you opening transactions, closing transactions, to open to close, to open to close. It's just, there's 98, by the way, in the last 360 days, there's been 98 fills. I don't want you to think this is a huge amount, you know, whatever. Okay. So there's 98 fills in the last 360 calendar days. Now there's 252 trading days in a year. So you can kind of estimate how many trades I've actually done in here. Okay. It's again, you can kind of estimate, and anyway, it's 98 fills in here. What I did though is I took all those fills and I matched up the open and closed. You guys ready? I'm going to rip through 18 months of results, and then I'm going to take you right into the TheoTrade site and show you the actual portfolio. So I'm going to show you, as I say, and I really kind of reiterate this, okay? One of the things that we're really big on here at TheoTrade is showing you everything that we do, okay? The buck stops here. When I say everything that we do, right? If I actually hop on TheoTrade, you can see every position and go into the portfolios and look at the Ultima TheoTheo portfolio. When I say every single position, okay, I'm actually in the TheoTrade site. Here's every, okay, opening position, every single opening position, every single closing position, okay, for what? Well, basically the last 2.5 years, okay? There's every single position we've done in here. Again, it's a no holds barred approach. I'm just actually going to take you through it. So this starts with Tesla, goes to a bond short put, 57% return. Now we send you out in a text alert exactly what this trade happens to be. We send you the opening, what you're supposed to trade, okay? You know, all of it is in there. Another bond short put, IWM short call, 62%, 53%. Tesla short call, 76%, 60% return, 50% return. SPY short put, 51%. SPY short call, 57%, 49%, 50%, 62%. Now we're into the QQQ, 53%, 50%, okay, 50%. And then again, if you're looking at this right now and you're like, he just does the same thing, QQQ short call. Here's another QQQ short call, 64%, another QQQ short call, 53%, another QQQ short call, 57%, IWM short call. By the way, if you're completely in like, it's maddening to go through 18 months of this because I do the exact same thing. But what I do is I'm actually scrolling through. Look, you do take losses once in a while as I'm scrolling through, okay? I just want you guys to see we trade the exact same products. And then once we get a little bit more comfortable, okay, and you actually know what you're doing, you can actually trade slightly larger products. So IWM, okay, bonds, Teslas, Amazons. Tesla's no longer a viable candidate. QQQ, SPY, 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 some more SPY. There we go. ES. Timeout. Once I jump to the ES is literally one contract in the ES is the same thing as 5 contracts in the spiders. So this trade is 5 times as big, okay, as the SPY short put. So even though this is a 52% return in the SPY short put, the very next trade is 5 times the size for the same 50% return. It also ties up negligible amounts of margin. It's nominal. It's actually great. It's one of the best products out there is the ES. Okay, it's also one of the more liquid products. So now we're trading ES in here, and we still jump back to the QQQ. Okay, 56%, 53%, 56%, 50%, 54%, 50%, 58%, QQQ, 54%, Qs, 31%. Okay, this is actually a Christmas tree. A Christmas tree trade is, once again, we took you from some of the basics in the SPY and the IWM and the QQQ, and we jumped people up to the ES. Now we took it another level and actually took them into SPYs and Christmas trees. Christmas trees is a trade within a trade. It's actually got a hedge within the trade itself. I opened this for a $21 credit. It's a ratio spread. $21 credit. And I want to show it to you because it's a cool trade. Closed it for a $3 debit. That is huge by huge, an 85% return. Okay. QQQ. All right, 57% return. Somebody said I froze for a second. What I say about Tesla, Tesla's not a good candidate anymore. It's not a good candidate. Okay, TLT 53%, ES 55%, SPY 19%, 57%, 50%, 54%, 50%, 52%. Okay, 49%. We're still in 2021. 63%, another SPY Christmas tree for a 92% return, 52%. Okay, 52%, 53%, 54%, 55%, 51%, 57%. Okay, 54%. Okay, here's a SPY Christmas tree where one unit of the trade made $3,953 for each one unit. That's huge. Okay, one unit of the trade, 53%, 50%, 55%, 50%. Okay, 50%, 57%, 55%, 53%, 51%, 50%, 51%. It's another SPY Christmas tree for $1,000 profit on one unit. 50%, 62%. Okay, 50%, sorry, 52%, 50%, 54%, okay, 51%. We're into 2022 here, into May of 2022. Okay, 51%, and that is it. At that point, I did 18 months of results in here, 18 months of result. After that, I was like pretty sick of copy and pasting. Okay, people go, where are the rest of the results? Everything is actually right here. By the way, we're all the way to present day. So the last trade I did in this portfolio was here on July 18th. Okay, as I said, I don't trade every single day. July 18th, you can see July 12th. Okay, the one before that was like a whole month. Okay, there's about, look, 3 or 4 trades in a month. That's it. You don't have to trade constantly. And you look at closing trades to close, to close, to close, to close, to open, to open, to open, to close, to close, to close. Everything is in here. You know what's cool about these trades? You can even just take the trade and literally copy it and paste it directly into a trading application. All of this, okay, can also be done right off of a mobile device. We even have, okay, our own mobile application. Okay, when I say it's our own mobile application, we literally have, whoops, right, a TheoTrade mobile application. On the TheoTrade mobile application, we have push notification with the alerts coming in here for every single trade. All the opening, closing, hedging transactions, you see everything. If you don't have a lot of time, it's not a problem. As I just showed you a moment ago, I do not want anybody to think that we're like, trading wildly, over trading. Look, every trade, okay, every trade that I just displayed for that 18 months and every trade thereafter, okay, was displayed live at TheoTrade. Okay, the trade results were showing a perfect for part-timers. All the trades that I actually just showed you have been texted out. Again, we have the ability right on the site, and I'll show it to you again. You get to opt in. Okay, you get to opt in for the portfolio right here. Put your email address to opt into text alerts. And the reason is you get to opt into a big portfolio, but we also have, okay, this is the bigger portfolio. We have what we call the TheoTheta small portfolio. So let's open that in a new tab. So we can see not only the big portfolio, okay, this is the TheoTheta small portfolio, all the opening, okay, and closing trades. They're almost identical. They're not identical, but they're almost identical. The big portfolio and the little portfolio. We just trade a smaller version. Okay, one of those is for like a $5,000 account on up. The other one's for a $50,000 account on up. Okay, and again, a fraction of your time is enough to see strong results. okay? This is very hands off. We are now, okay, very different than we were over the previous, 7 years of TheoTrade. We educate, now we actually do real-time alerts. TheoTrade will provide real-time trade alerts. We do text messaging, we do push notification. We even do videos at the end of every week to update you on every move that we've made, okay? Look, I recognize a lot of people, okay, don't have the time to learn this massive new skill set. And you're worried about, like, I got to sell 3 of these and 3 of these and a little hedge over here and this, okay? Follow the real-time alerts. Selling premium can be a wonderful hedge for recessionary times. Like how I put that in there, recessionary times. You're like, what recession? Don't worry, it's coming. The market, though, in all reality, is going to be in a bout of volatility for years to come. That's hard to convince people of, but I am very steadfast. There's, I can't tell you a lot about directional, whether we're going up, whether we're going down. One thing I can tell you, when you have the financials flat on the year, when you have the energy sector basically flat on the year, okay, and you have the Nasdaq up some 40 or 50% on the year, you got problems. We're going to be in bouts of volatility for years to come. What our members are saying, this comes from Mike Smith. If you're serious about trading, okay, TheoTrade is by far the best resource out there. If you cannot make dollars, you're not paying attention. They even have a hands-off approach to trading as well if you really don't want to learn to trade on your own. Their instructor's the best in the business, okay? Characteristics of selling Ultima Premium, right? Listen, you never have to buy or sell the stock. The risk here can be tailored to your comfort level. We don't use stop orders ever. We don't use stop orders. You can vary time frames, minimize risk. The probability on most of the trades is incredibly high, meaning that you're very infrequently going to have to worry about using the hedge, but the hedge is the sacrificial lamb. It's a perfect strategy to enhance your portfolio. Okay, this is an excellent tool for those seeking returns to build an account, and new products, which I showed you, okay, allow for the sale of options in nearly any account size. Look, building a portfolio of options. The one thing that I implore you, okay, is do not let the options portion of this intimidate you. Let the alerts do the work for you. Look, options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market, okay? However, learn a little bit, mitigate risk. Selling premium can be done for minimal credits, minimal risk, okay? In the meantime, if you're not one of the ones that really wants to spend a lot of time educating and so forth, let the alerts do the work for you, okay? There's very brief introductions just to get understanding so that you can place these trades efficiently. Look, you can sell Ultima Premium and minimize risk. If you know nothing about options, fine, okay? As I said, do not let the options portion of this intimidate you, because we strongly urge you, you're going to need these strategies for the foreseeable market future. You're going to need the strategies. We can show you how and when to sell premium in a matter of a few hours. Again, just going to ramp you up to the point where you can follow, okay, the text alerts. More importantly, again, we now provide, and that's the biggest change that we've made since we launched TheoTrade. We launched TheoTrade in January of 2016. Okay, in 7 years, the biggest change we've made is, I don't want to do alerts, but look, we trade this stuff. The track record, okay, is there. We now provide real-time alerts. Look, this is what you need to know to successfully sell Ultima Premium for a living. You got to know what underlying stocks or indices make the best candidates. Like a moment ago, I was like, oh, Tesla's no longer a good candidate. It's not a good candidate, okay? The volatility is very scary inside of Tesla. You get destroyed in there, eat up a lot of margin too. You saw me trade ES, MES, phenomenal candidates. What volatility should I seek out? Too much volatility, you're dead. Too little of volatility, you're dead. We give you the right volatility. This is what criteria is. What options expiration do I select? Have you guys looked at an option chain lately? I mean, seriously, have you looked at option chains lately? If I come over here to the spiders, just the spiders, okay? How many different expirations? Well, this is the ES, but how many different expirations? Look at all the expirations in here. It's insane. Every day is expiration day now. Every day has an expiration, right? But look very carefully. See where my positions are: 115 days, 98 days, 66 days. Okay, why? Because that's, we practice what we preach. That's what we trade out here. What should be the delta of the option I sell? What should be the probability of the option you sell? What options do I buy against my position? How do I build the position? I already saw somebody questioning, and it's the right question to ask. How many hedges do I need? For how many options can I sell? It's ratioing, blending it together, right? Got to get it together. Do I need a large amount of capital in my account to do this? Absolutely not. What is the right amount of risk for me? Dependent upon account size. We actually help you kind of fine tune a $5,000 account, X amount of risk, $10,000 account, X amount of risk, $50,000 account, X amount of risk. We help you with that. What are the percentage returns supposed to be? About 50%. How do I protect myself from market crashes when selling options? Hedges, risk mitigation, hedges, VIX volatility spreads, risk to spreads, gamma irons. We also have another one called inflection point spreads. Let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading, criteria, and now real-time alerts, okay? When those recipes and those trade criteria are hit, real-time alerts when the opportunities arise. Look, trading's always been about answering the what if. What might be a good stock or ETF candidate? What's the correct option expiration cycle? How much capital do I commit to generating premium? What strike options do I sell? What strike options do I buy? How can I limit my risk? TheoTrade has the answers. And we have the trade alerts. We build recipes with definitive criteria. They're checklists with each strategy and each unique variable, okay? The way that I like to express checklists, if you hopped into the cockpit of a 737, the pilot goes through a very detailed checklist, okay? Everything pre-flight. Then while they're in flight, okay, if something occurs, they immediately go to the checklist. There's no difference in trading. Okay, what do we do before getting into a trade? Check liquidity. What do we do? Check liquidity, check bid offer spreads, check if there's open interest, if there's volume, okay? Check the volatility, and we're just actually going through a finite checklist. It becomes second nature, right? And then once we're actually in the trade, then what do we do? What if the stock goes up? What if the stock goes down? What if the stock tanks? And now we're taking it a step beyond. Instead of just going through the checklist, we're actually giving you alerts when that checklist and those criteria, okay, are hit. Look, TheoTrade is the answer to the questions: the right probability, how many option contracts for the account size, when do I close the premium sell, what if we sell off big, what do I do to bail out of a trade, what if we rally massively, can I fix a losing position? It's about how, when, why, at what price. And I'm telling you right now, that is just the beginning of some of the variables you're going to face while selling Ultima options for a living. Look, you can read about what selling Ultima Premium is. I always tell this to people. You can go out and you can Google. You can Google selling options premium. 10,000 pages will populate on a Google search. Literally like 10,000 pages, okay? Selling options premium, and all of them, okay, will have a dramatic, $30,000 price tag. It's ridiculous, okay? The one thing, maybe you've even sold some options before and you know how to build, okay, a couple of trades. You're not learning to sell options premium here, okay? You need the trade alerts. You need the criteria. There's 20 plus years of trading experience and criteria that has gone into building this strategy. We had access to client order flow for 15 years. And I say we, okay? TheoTrade has 8 full-time instructors, okay, including myself. We viewed and studied millions of trading accounts, and I ran education at both thinkorswim and TD Ameritrade. And at the time that I was there, we had by far and away the largest options order flow in the entire industry, bar none. Okay, it was massive for 15 years. We know exactly what works and what doesn't, and that's where this criteria and the genesis of this criteria comes from. Ultimate Trade Alerts is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning Ultima, fine-tuning the setup, fine-tuning the criteria, and now real-time alerts on the convenience, okay, of any mobile device. The Ultima income generator alerts. I happen to actually manage these portfolios, both Theo Theta, we call it Theo Theta, and Theo Theta Small. The trade alerts for the next 3 months, it's $297. And before anybody freaks out, tunes out, you got to understand something about TheoTrade. You can go out and you could spend $30,000 on stock market education. It will pale in comparison to what we provide you, okay, in the next 3 months. Okay, couple of things. This, right, includes not just Ultima alerts. That is everything that we do at TheoTrade. Everything we do at TheoTrade. That includes a chat room that we broadcast for 6 hours a day. That includes, okay, classes, access to our archives. Okay, you can email us at any point, receive a response, even trade-related questions. Anything that you need, okay, we're going to provide it for you. The $297 is for 3 months. That is not an introductory price. People always want to know, like, well, what happens? Okay, what happens after 3 months? After 3 months, if you want to do it again, you pay $297. Okay. One last thing on here, and I'm going to explain it a little bit. One last thing. It's $297. Okay. That is not like, we don't auto bill or auto renew. After 3 months, if you want to do it again, you can do it again. Okay. The initial $297, there's a full money back guarantee on it. If you don't like it at any point, and I'll talk about this again in a moment, but if you're not familiar, you don't like it, anytime in the next 3 months, okay, there is, okay, no exclusions, no parameters, no nothing. You don't have to, call us, just send us an email and we'll give you $297 back. Right now at TheoTrade, okay, we have just under 6,000, okay, individuals, okay, on Theo. There's 6,000 people in here. I don't even call them members, they're clientele, because membership, people think there's going to be a monthly charge. This is not like a gym membership. It's 3 months, it's $297. Okay. You can go to theotrade.com/SKU. And I'm going to take you over there really quick. And then I'm going to explain the money back guarantee on here. Okay. theotrade.com/SKU. Okay. That's S is in Sam, K as in kick, E as in echo, W. theotrade.com/SKU. Okay. All you do is click add to cart. Now, the reason I'm taking you through here, I want to make sure everybody sees this before anybody actually fills it out. Put your phone number in here, please, because it automatically enrolls you for the text alerts. It'll save you a couple steps. You'll hear me mention that a few times. Put your phone number in there. The other thing is, we don't care if you pay $300 for 3 months, $150 for 3 months, breaking into 2 payments or 3 payments. We don't care. But I want you to know there's no reoccurring billing in here ever. Like, we don't sign you up for a membership and then go, bill. We don't do that. Okay. And at any point in 3 months, get your money back if you're not happy. Right. The one thing I implore you guys to understand, and I'll go right back to this. We want people that want to be here at TheoTrade. We want people that want to be here. Okay. All the major brokerage firms work with us. And I say all the major brokerage firms. If you look actually at the TheoTrade site, okay, some of the resources over here, Taste of Trade, Magnified, Tradier, E-Trade, work with everybody. Okay. We work with also Chicago Mercantile Exchange. You'll see them doing, like, TheoTrade actually would do joint sessions with the Chicago Mercantile Exchange. We've been in this business now, specifically me, for 25 years. We know everybody in the business. It's a very, very tight-knit group. Now, okay, before I show you a little bit about the money back guarantee, the TheoTheta small portfolio, okay, account minimum is $5,000. You can trade this with as little as $2,000. Okay. I suggest though 5,000. The TheoTheta big boy portfolio is 50,000 plus. If you come in here though and say, Don, I have $15,000. What do? I don't follow this one. I don't follow this one. Now you follow this one, you just do it times 3. Okay. That's your allocation. It's just a multiple of it. It's very, very easy to do. So We are adamant though about how we allocate. We only allocate a very minute amount of capital. So of the $5,000, okay, I'm not going to use the full $5,000 because you need what they call margin expansion in here. Okay, we can actually get to capital allocation. Everything is covered here. Everything is covered. Now, the ultimate income generator alerts. I'm the instructor and the portfolio manager for this one. It's ultimate premium selling. It's a no holds barred trading approach. You can see everything we do. It's full disclosure on all trades, opening, closing, hedging positions. You get to see me trade and discuss positions. Okay, we even have a small portfolio. In addition to this, okay, we have just added this as of like 2 weeks ago. You ready? Okay, this is a huge bonus. There is a beginner's guide to Ultima Trades Mastermind. This is actually run by none other than Brandon Chapman, okay? Expert guidance. Brandon Chapman actually worked with us at both TD Ameritrade and thinkorswim. Brandon's even been in the business even longer than I have. Industry expert. He has a CMT. He's going to guide you through, okay, the world of ultimate trading. This is to get you ramped up immediately, okay? It's like a beginner's guide to being able to sell premium. Q&A. You're going to have an opportunity to ask questions, clarify doubts, anything about ultimate trades. Skill building. The mastermind actually focuses on building skills and confidence before going out and following alerts. Supportive community. You're actually going to be in a community of like-minded, traders and investors, okay, where you can actually share experiences, talk to other traders. This, okay, is a 6-week mastermind. We're including it right now. It starts Thursday, okay, July 27th. Look at your calendar right now. Today's the 25th. This thing actually starts this Thursday. And you go, what? Okay. Look, we give you access to everything. And I want you to see something because we just started adding this. This market maker like event right here. This is the mastermind. And it starts, as I said, weekly mastermind for 6 weeks, begins July 27th. Okay. If you signed up for that alone, okay, that alone is $1,000. We're giving it to you. Why are we including it? It saves us incredible amounts of time answering emails. We are doing this, okay, purely as kind of a trial to see if it cuts down the number of emails we get. We're putting you into a mastermind. That mastermind that starts this Thursday. It's this Thursday, okay? It is just after the bell. It's 4:30 Eastern time. If you can't make it, it's fine. It's actually recorded. You can still email Brian. This is all part of it. It's $1,000 mastermind. We're giving it to you. Still fits in there. You don't have to pay the $1,000. You're under no obligation. Okay. With all of this, you still have a money back guarantee. Okay. The money back guarantee. If you're not satisfied in the next 90 days, just email us. You don't have to call us. You don't have to like give blood with a certified letter, like getting out of a gym membership. Okay. It's a money back guarantee. Stipulations. There are none. We have no stipulations. As I said again and again, we want people that want to be here. You have 90 days. Okay. 90 days. No excuses, no questions, no commentary. Just email us. If you really just email us, it's $297. I'll still love you in the morning. Okay. Even if you get your money back, it's okay. There's 6,000 people here. And we've had people leave and then they realize everything else out there, okay, is absolute crap. You can literally spend $30,000 on stock market education. Okay, you could easily spend 30 grand and not get everything that we have here. There are 30 riskless spots in here. Again, I'm going to throw this web address up here and I'm going to answer a bunch more questions. I'm going to take you through some general questions. It's theotrade.com/SKU. Just click add to cart. Click add to cart. I reiterate, please put the phone number in there. Okay. Pick whatever plan you want. Oh, by the way, everything in here, whether it's 3 payments of $100 or 2 payments of $149, it doesn't matter to us. You still get the money back guarantee. Okay. In addition, okay, you get everything that we have at TheoTrade. You get the member home over here. When I say member home, okay, we have 7 years of archives. You have a start here tab. What's a start here tab? Okay. These are videos, options 101, 201, 301. You get access to all of this. You get access to a live trading room. Okay, what do you mean a live trading room? See this right now? Ironically, it's Brandon Chapman in here.
8590 call vertical.
That's live. We do this for six and a half hours a day. This is a chat room. Okay, any given point in the day, there could be hundreds of people in here. When I'm live, I'm always live every morning. Okay. When I'm live in the morning, there'll be probably anywhere from 1,500 to 1,800 people in there live. You could chat with all of them in there, but you actually get to see my screen broadcasting exactly like this. You can hear us.
I don't know.
Okay. And that's Brandon Chapman actually taking you through his platform. You have access, okay, to every class that we've done. When I say a class archive, so TheoTrade is a lot more than just alerts. You get everything. When I say like classes and I say $30,000 of education, just option classes. Let me click on options classes. This is my kind of area of expertise. Okay. Just in option classes, catapult, Z spreads, flyby, inflection point, income accelerator, Ultima. Okay. These are all classes that are ready to go. Like when I say ready to go, inflection point spreads, probably one of the most prolific classes we've ever done. This is like a must watch. Okay. And going through it, this is the class. Blow it up into a full screen. You're actually seeing me, okay, broadcast live. All the criteria, the PowerPoints, everything is available to you, okay? TheoTrade, it's the one stop for everything that you're going to need in this business. Again, there's a 90-day money-back guarantee. Now, the Ultima alert, those are alerts that are sent via text message or a push notification. You can use Android, you can use iOS, you can use, any one of your tablets out there, okay? Obviously an iPad or any of the Android devices over here. These are what some of the alerts in the portfolios look like, okay? 2022 Ultima portfolio returns on a $50,000 account were 56%. I'm just going to throw out a caveat. That's in a really volatile market. The more volatility is, the better it's going to do. Okay, it's not going to hit 56%. We're still generating really good returns this year. Every week, there's an update video, okay? These update videos, this is nothing more than a 12-minute video. Okay, in 12 minutes, we update you on everything that I have done, okay, throughout the course of this week, all opening transactions, closing transactions. I get you, okay, into the head of why I did it. By the way, yes, we send alerts to Canadian, okay? We actually do send text messages, okay, to Canadians. What the alerts look like, something like this. Theo, this is the Ultima trade, TheoTheo small, okay? Sell this for a $10 credit. Okay, here's another. This is text message from June. Here, buy back this for $10.50 debit, closing for 50%. Okay, Theo, Ultima. Okay, sell the 3,600 put for what? $17 credit. This is the most complex order we would ever send out. This is actually, okay, buy one, sell another. It's actually called a roll. This is a rolling order. That's as wild as it ever gets. Okay, I actually have to pick one trade up and move it further out in time. This is a rolling order on an existing trade, not a new trade. Trade may be legged, okay, as two transactions. It's kind of cool, huh? I mean, that's it. That's what a text message looks like verbatim. I took this off of my phone and pasted it directly on here. You go, what? Couldn't be any clearer than that. Sell the 4,750 call in the Nov 1723. You go, what product? MES. Couldn't be easier than that. So I'm supposed to buy this one back and I'm supposed to sell this? Yes. Okay. Believe me, between Brandon, okay, helping you in that mentorship. And again, I don't put enough weight into that. That mentorship that Brandon's doing, okay, for 6 weeks, it's $1,000. We put this together and charged people $1,000 and it literally had it waitlisted, okay, forever. But we found that everybody that goes through his mastermind was so much better off. And we're like, just forget it. Just put it in there. Put it in there. And what Brandon will do is he'll do more of these mentorships and we'll just stack people into them. Instead of paying $1,000, we included it because it actually increased the viability of you as a client. The single most important thing. We're not successful here unless you're successful, period. Okay, it's $297 for 3 months. After the first 3 months, we need you to want to sign up again. Why? We don't make money unless you're actually here for a year. It's just the way it works. Okay. We want you guys to succeed and whatever it takes. And that's why we're putting $1,000 mastermind into this. We put a money back guarantee into this. We want you to want to be here. All right. So moving on over here, those are actually the text messages. What our members are saying, Kirk Knight, consistent, valuable education that is supported on an ongoing basis for us users long-term with very successful results. And I'm a member of TheoTrade and a student of several mentorships they offer for about 2.5 years. And I'm quite satisfied and actually enthusiastic about programs. I've seen some of the reviews, okay, the clear objective reviewers. okay, was to find something wrong and whine about the cost, too bad for those reviewers. Okay, they're obviously missing the point that TheoTrade program is very inexpensive for what it provides, and the results pay for the costs involved many times over. Okay, this one comes from Paul M. Education is second to none. Okay, and if you're a novice when it comes to markets and trading, the trading material is superb, professional, organized, and written in plain English. The professionals at TheoTrade, okay, have all of the content that you could ever, okay, that you could do whatever level you want, sorry, to take your trading, investing, education skill to. Been a member for 3 years and still growing, learning, really enjoying the experience. All right, last one over here. I want to thank you for all the different staff point of views in trading. This year, I did more of what works, less of what didn't. Thanks to your selling premium and inflection point hedges, I took $12,000 to over $32,000, okay, in 18 months. I'm doing your method, okay? Thanks again so much and look forward to your new ideas in the coming year. Look, get into TheoTrade now. We're going to work with you directly. Obviously, okay, 2 things. Number 1, we give you 30 riskless spots. 30 riskless spots. That means on the money back guarantee, okay, we provide 30 spots over here. Okay, we do that literally to incentivize people to enroll for it. There are 30 riskless spots. I'll let people know kind of how it's going in terms of the, some of the riskless spots in here. Again, all you have to do to enroll is just theotrade.com/SKU. On here also, reminder, okay, it is a completely riskless deal, okay? We give you unlimited email mentoring in addition to this. So you get the mentorships, you get access to all the trade alerts, you get access to everything we're doing here at TheoTrade in terms of archives and classes and the chat rooms. You get to see other portfolios, the TheoTheo large portfolio, TheoTheo small portfolio, okay? And the $297 riskless offer has never been available before with Ultima, income generator alerts, and the beginner's guide to Ultimate Trades Mastermind. Again, that mastermind, I put just a huge amount of weight into it because we were literally charging $1,000 for it up until a few weeks ago. We're like, let's try this, okay? And in putting some of the newer clients and like an experiment, putting some of the newer clients into it, people jumpstart and we're off and running, okay, in no time at all. So again, there are 30 riskless spots left. As you guys are enrolling, okay, feel free to fire some questions in. We're here to answer some of the questions. Get ready for text messages. When we do send out, okay, these are the phone numbers. Okay, the text phone number comes from a 602 area code. 602, by the way, that's actually Phoenix, Arizona. In Canada, it's a 647. Okay, so those are where the text messages are coming from. Do not expect a ton of text messages. We text message you when we execute trades into the portfolios, okay, that you opt into, and opt into the TheoTheo large portfolio. Everyone's immediately opted into the small portfolio. It's the large portfolio that you have to opt into. The address again is theotrade.com/SKU. It's S as in Sam, K as in Kick, E as in Echo, W. All right. Judd said, I've been a subscriber for about 4 years. This is the only organization that has actually taught me how to consistently make money in the markets. By the way, a couple of names that I'm going to read off over here for the first few people that have enrolled. And again, I'm just confirming your enrollment. Just so you guys know, it takes me about 5 to 7 minutes before I actually see you enrolled. So John T. from Illinois, Henry A. from Texas, Frederick R. from Michigan, Christopher K. from Germany, Michael B. from Georgia, Peter D. from South Carolina. Just reading off the first batch of about 6 names that we're seeing kind of come through in here. So I'm going to answer general questions, and then I'll try to answer some specific questions, okay? Earlier, I already addressed some of the IRA accounts, which is absolutely viable here, but people always ask when they come to TheoTrade, what do I need? I have to actually change this in here because I used to say, oh, you need a laptop and an internet connection. You don't even need a laptop anymore, okay? So I live right now, I'm in the Virgin Islands. So I'm in St. Croix in the US Virgin Islands. People always ask why we came down to the Virgin Islands. During COVID, kids are out of school. I have 3 kids, okay? My kids are still relatively young, like 8, 10, and 13. Kids are out of school. And We had a friend that's a trader that lives down here. By the way, everybody in the whole world pretty much knows this trader's name, so I won't mention it, but he lives down here. And he's been trying to get us to come down and check this place out for like 10, 15 years. The whole community that we're in down here in St. Croix is a bunch of traders, some like of the most prolific traders in the history of like hedge funds and finance. The father of modern monetary theory lives up the street. One of the biggest market technicians in the world lives right down the street. It just goes on and on and on and on. So it's like the mecca of trading. So we moved from Arizona and we moved to the island. Now we actually go back and forth. So we go back and forth because it turns out that after about 8 months on an island, you want to get off. So I'm in like third or fourth month. Okay, I don't really get island fever, but it is what it is. I actually I like it down here. Okay, I like it down here, except when the power goes out. And right now it's absolutely torrential pouring rain out there. It's awesome, but it never gets hot here. Never really gets cold here. Okay, you just got to watch out for Category 5 storms. Okay, somebody asked how many trades per week. We probably average about 3 trades a week, but in all honesty, the way it works, okay, when I say we average, like, I'll say 2 to 3 trades a week. It doesn't work the way you think. It doesn't like always work that there's 3 trades in a week. You will have weeks where there's nothing, and all of a sudden 10 days goes by. You're like, what is he doing? He's not doing anything. And all of a sudden, bam, 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 bam. I'll do like 5 trades in 2 days. Okay. It's just the way we roll because you're subjected to whatever the market's doing. The market's not going to do anything. And like, it's been some slow weeks, since like, July, it's been slow. It's like, this is like a little bit of summer trade over here. Like if you look at the S&Ps right now, they're not doing a lot. And that doesn't mean more trades or less trades doesn't mean you're making or losing more. Okay. But like, if you look right now, I'll just zoom in here really quick. Okay. We're not even doing 2,000 contracts a minute in the S&Ps. On a good day, you're doing 5,000 contracts a minute. We're not even doing 2,000 contracts a minute, right? We only have 2 hours left in the trading day, and we're not even at 1 million contracts in the S&Ps. It's really, really slow. Okay, that's okay. So I won't do anything really today. That's okay. Okay, don't worry because you're in there in time, and it does work out to about 2 or 3 trades in the given week. Okay. Travis, I reside in Arizona. Okay, I'll be back in Arizona when it's not 115 for like umpteen days in a row. Anyway, continuing on over here. You need a laptop connection. You don't even need a laptop. You need like any iPad, any mobile device. You can literally these days do everything off of the phone. And I really, truly believe that because, here at TheoTrade, I'm every bit a tech geek as I am like a trader. Okay. And I make it known, like I can run, okay, our entire operation. I could run, tens of millions of dollars right over my phone now. Okay. I also have this thing where instead of sitting in my office here, my office is in a separate building, okay, than the house. So I have to actually walk outside and go into the house. In the house, though, I just use an iPad. Okay, I sit there. There's crap flying over my head. There's kids everywhere. Okay, but I like trading on an iPad. Something about touching the market, it works for me. And I don't have that good iPad. I have the $299 Walmart iPad. Yeah. We don't do memberships here. We don't auto renew or auto bill. So I'm very adamant about that. I don't, like that in my own life. And I don't think you guys like it. It's $297. You pay it. If you want to do it again, you pay it after that, but it's $297. So I don't want anybody to think like it's a fortune over. It's $297. It's a cost. Again, I think of doing business, and we make it a cost that's, it's not up for dispute. It's $297. It's a nominal cost. Okay. So number 3, we're now providing weekly update videos. So these portfolios like TheoTheo large and TheoTheo small, we do weekly updates. So you can follow all the moves we make. Some of you want to have insights. Why do you do this? How did you do this? What were you thinking? Okay. We give you exactly that. I mean, so I want you guys to know what's going on kind of behind the scenes. Like it shouldn't be magic because the idea here is not only just to follow our alerts forever. Okay. You can follow alerts forever if you want, but some people are like, no, I want to do even more. I want to totally learn it myself. That's really what we initially designed TheoTrade to be, is to educate you to how to do it yourself. And we do that, but we're also like, well, screw it. We trade ourselves. So let's just do that too. Continuing on over here. So we're going to give you access to Theo Mobile. We give you access to Theo Mobile. Theo Mobile will work on Android. It works on iOS, whatever it is. Okay. Yeah, I'm an Apple phone user, but whatever. Okay. It doesn't, I got my Mac issued underwear, but I'm also a huge believer of PCs. I don't use Mac for trading. Okay. I don't use Mac for trading, but I use, obviously use Windows for trading. It's a little easier. I use Mac for other devices. I got the watch, okay. By the way, the watch is the greatest thing if you trade, because it like taps you on the wrist when you execute a trade. It's good stuff. Few more names. Terry M from New York, Tommy M from North Carolina, Jim M from Virginia. So I'm just reading off a handful of names. Again, there are 30 riskless spots, of which right now, okay, I know it takes about 7 minutes before I see your name in here, okay? About 7 minutes before I see your name, but we're eating up quite a number of the spots. We're about halfway through, okay? And I'm gonna butcher this name, but NJ L from Florida. Did I butcher your name? I apologize if I did. Okay. Continuing on over here. Cell phone number. Add it when enrolling. Receive text alerts. You can email us anytime. By the way, I'm also very big about this next one, number 6. Email us anytime. Receive a response within 24 hours. By the way, we always throw the 24-hour thing out there because there's always one person that's like, there's 5 minutes to go to the close on an expiration day. Okay, look, we trade here and we're avid traders. So give us a little time. Give us time. We have to, we're managing multiple portfolios. We're managing our own accounts. Okay, at any given point in time, I mean, I'm directly responsible for, accounts, and, then we've actually got some other accounts that clients are following like you. So in no uncertain terms, we probably have a few $1 million, okay, that I'm managing. So again, we're trading. And we were more than happy to answer your emails. Give us a little lead time though, okay? Most emails get answered within a few hours. Most emails get answered in a few hours. When they're really in-depth trading questions though, give them to us. There's one thing we don't shy away from here at TheoTrade, okay? People go, you can't ask a trading question. Of course you can ask a trading question. Most of our people here at TheoTrade have had every license imaginable. Like, I've had my series 3, my series 4, my series 7, my series 24, my series 66, which is a 63 plus a 65 combined. Okay. I've had every license imaginable. We know how to answer questions. Brandon Chapman's had his license, Jeff Bierman's had licenses. Okay. I've even had some of the Canadian licenses. I've even had my I don't know, P something or other for down in Australia. I can't even remember what the heck it's called anymore. Okay. Anyway, number 7, variations of the trades available inside of an IRA or retirement account with as little as $2,000. TheoTrade, we can help you get approved for options trading. Look, if your brokerage firm says you can't do that, we can help you. Okay. Either find a firm, we can either help you with that broker, or we can help you find a firm, okay, that will allow you to do this. Okay. On the island, do you have your driver's license? Of course I have my driver's license on the island. I'm a big boy. I drive myself on the wrong side of the road. We drive on the other side of the road here. So we drive on the wrong side of the road here in the Virgin Islands. Yeah, no, I'm a full-fledged resident of the Virgin Islands. I'm here now much more than I'm in Arizona, because it turns out that 118 degrees, it's not really for me. There are 30 riskless spots available. Look, get results, take action, enroll to TheoTrade now. There's no risk in doing so. It's theotrade.com/SKU. Again, I'll throw this page up here. I'm going to type and answer any remaining questions in here. Okay, so by all means, if there are some questions that pop in here, if I don't catch you while I'm live, okay, I want to make sure that I still am able to answer some of the questions. Okay. By the way, John was saying, why only a 56% annual return when you're showing 50% plus monthly? No. Those are not 50% monthly returns. Those are 50% returns on individual trades. So if you have like a $50,000 account, and a $50,000 account, let's say there's 5 trades going on. And those 5 trades are each getting like 50% returns. It's not 50% of 50,000. You don't like roll the dice with the whole account in there. That is chaos, sir. So I am emphatic about capital allocation, absolutely emphatic about capital allocation. One of the things you're going to learn is at any given point in time of the 50 grand, we're only using a very small portion of it. And why? It has to do with margin expansion. That margin, is not what we term static. If you go out and do a trade and say it holds $3,000 of margin, let's say you have a big account and one trade holds 3,000 of margin. The 3,000 of margin can actually fluctuate a little bit. So by the way, a 56% return on a $50,000 account, it's unheard of, especially in a down year. It's unheard of. You look at any hedge fund or whatever, the first rule of thumb, beat the S&P 500. In any given year, the S&P 500 averages 8% in a year. But the returns, if it's a smaller account, it's a little easier. When you start growing the size of the account, you start trading like $250,000 plus, it gets a little more serious out there. All right, a couple more names are popping in here. Ty T from Washington, Randy K from California, Annie I from Canada. By the way, the names that I'm reading off, these are individuals that have enrolled. I'm just confirming I see you guys. And again, you can join us at any point. As soon as you get your password, username, and login, you can actually hop in to TheoTrade, come over here to the member chat room. We're live right now. This is none other than Tony Rago. Tony actually is trading live right now. He trades intraday. He's a day trader, day trading Nasdaq futures. So we have, again, a genre of trade for everybody. You're not pigeonholed to just selling premium. If you want to learn anything and everything, it's in here. It is in here. All right. I'm just reading through some of the questions over here. All right, I want to type a couple more answers to you guys, but I want to thank each and every one of you for joining us today. I think I got most of the questions answered in there, and we should be good. Brian Aponte, myself, Jeff are all answering some of the questions. Oh, the indicator. That is a wonderful question. The indicator, if you'd like that, it's theotrade.com/SKU. The indicator is actually located right at the bottom of the screen there. Auto expected move. You've got it. I want to thank everybody for tuning in today. Have a wonderful afternoon. And well, depending upon where you are, stay cool out there. Thanks, everybody. Bye-bye.